Hey everyone, Evan Kirstel with another great guest. Today I have Kyle York, entrepreneur, founder, innovator, venture capitalist. What else can I call you, Kyle?
Good looking. I don't know.
A very good-looking guy, and your venture is has its tentacles in all kinds of fascinating endeavors at York. But maybe let you introduce yourself. Who are you? We know each other from your days at Dyn, which you sold to Oracle for many hundreds of millions. But it's been a little while, so help us catch up.
Yeah, great to see you. And I know you just recently moved to Massachusetts. We still like you. You're a New Englander, but you were in New Hampshire for a while, which I remember very well. Yeah, so great to see everybody. I am building a company, York IE, which is a vertically integrated strategic growth and investment firm for startups. Our model is really on the backs of a lot of my operating career as a sales and marketing and business executive, working alongside a lot of great and passionate engineers and domain experts from different markets and industries that are deeper tech. But I not only was operating all those years building Dyn, I was doing a lot of angel investing, running investing syndicates, doing advisory gigs and boards, being an independent board member. And by the time we sold the company to Oracle and then spent a few years inside Big Red, which was a very unique experience, I also, realized like what I wanted to do full time was a mix of both. I still love operating. I still want to be building a company. I just wanted to build a company helping other companies and being able to do lots of things from our data platform to our advisory services to our capital investments, doing that all in one package. Instead of having one thing be your moonlight, one thing be your day job, I wanted to do this full time and build an infrastructure around me to do so. So that's what we're doing now, and it's going really, really well. It's really busy. It's never a dull moment when you're living the trials and tribulations with founders and startups across a very wide array of engagements. So it's been great.
That's fascinating. And I got this line from your website at York, Kyle. It said traditional business growth model is broken, which I would agree with. But what's your perspective on the traditional sales marketing go to market model? Why is it broken?
Well, I think it starts with, if you think of being a founder and starting a company today, unfortunately, everyone just thinks, what money do I need to raise? And what venture capitalists do I need to talk to? And, there's true in deep tech and very hard tech industries, you certainly need outside capital to build your prototype and get to MVP and go to market. But in many industries, you can bootstrap your way there, raise very small amounts of money, or use some debt financing. And I think just the world we live in has become so much this fundraising hamster wheel. Companies are burning incredible amounts of capital, are incredibly inefficient. The pragmatism of, is this a good business or not? Question is, I think, lost when you get into this kind of venture rat race. And that's what we're kind of talking about. It's build good, healthy, sustainable companies, be capitally efficient. Doesn't mean don't raise money if the market opens up for you and you have that opportunity to scale and grow and become a unicorn. But we've just seen so many unicorn chasers raising hundreds of millions of dollars, burning 5-10 million a month. It's just not healthy, not sustainable forever. And obviously in the macro market these days, it's kind of played into our hands a little bit, like Yankee pragmatism rules the day. So anyway, that's kind of where we're coming from. This whole culture around TechCrunch headlines and, funding sizes and non-paper valuations, so many casualties along the way there if you're not careful, and sort of lived a bunch of that over the years. So take those learnings and, help coach entrepreneurs to do it a little differently.
I love it. It's especially important given the R word, the recession word, which we're clearly entering or are in. And so how did this get away from us? The idea of just building successful, sustainable companies and being practical and pragmatic. Did we get caught up in the hype circle, or what happened to
Well, I
us?
mean, it works for some, right? I mean, everyone wants to be an outlier in anything, and I think that's the issue. If you're only building a company for that outlier status, or to find the lightning in a bottle, or the PLG model where your user adoption is outrageous, I think that institutes a lot of consumer risk into business. And, not every company can go raise 10, 20, 50, $100 million. So I think it's just everyone's outlier chasing. When I was a kid, I kind of knew I wasn't going to play football in the NFL, but I still love playing football, right? I think everybody's like, oh, I want to be Figma. And it's like, well, a lot of things went right for that company, a lot of luck, 400 plus million of funding, lots of different things made that business happen. And, not everybody's going to be able to get on that path. Right. So I think it's about, being realist and understanding that success is relative, and there's lots of different sort of scales of success. And, the cap tables aren't always what you think. Most of the money made in that deal was the VCs and, the growth equity investors and the founders, but I'm sure there's a long tail of people who did well, don't get me wrong, in the companies, but they're outliers. So just be careful what you wish for when you're trying to build these companies.
That's fantastic advice. And tell us about York.ie. You talk about it actually as a platform, as a SaaS platform, and that's a little unusual. How do you explain York.ie?
Yeah. So, I think York.ie is going to be it stands for investment enterprise. Everyone always asks that later. It's going to be more obvious as we get to scale. I think it's tricky. The first thing we were able to launch when we launched our firm in late 2019 was the investments portion of our business, because I was already running angel list syndicates and have been pooling capital into the York Fund with my brothers and some friends for many years. And I was angel investing. So we already had the deal flow, right? So when we launched, I think it looked more like, there's a lot of investment firms that are built by operators, VCs that are built by operators that even have some infrastructure. OpenView, Insight Venture Partners, these types of guys always pop to mind. I think at scale, we want to look more like a McKinsey meets BCG meets Gartner for startups with a venture arm, right? And a capital pool to invest in the best and the brightest in our favorite early stage B2B software companies. But obviously you got to get the scale, right? So core operating business of York.ie is a SaaS plus services operating model. The SaaS platform is a market research and data platform for startups. Think of it like private company database with a bunch of different smart tools and capabilities and templates and automation for how to build and grow a startup. I always refer to kind of like a pitch book meets like G2 Lite, right? You can live chat analysts, you can get advice on growth all within the platform. And that platform is free to individual seat user to teams to enterprise. On top of that, we originally built the platform to automate and make us more efficient in both our investments business, for our analyst team, and to do investor relations and track deal flow and track active portfolio, but also for our tech-enabled advisory services. We offer services for marketing communication, for go-to-market and revenue operations, for product development and strategy, and for business growth strategy. So those are our four key advisory services that we charge a monthly retainer for. And in some instances, we'll even work for stock options or warrants or some
We're going
equity.
to talk about a fifth pillar, which is social media marketing, but that's for after the
Yeah. Well, you're going to help us with that. We talked all about that earlier. So absolutely. So we have these core services that are part of our offering, and we assign an advisory services manager to every engagement. And that advisory service manager pulls in the practice leaders and the strategists and the specialists by module to help deliver on the blocking and tackling that comes with delivering those services. And we believe that model of that recurring revenue advisory as a service meets SaaS platform creates a lot of efficiency for us to deliver, but also keeps costs low and integrated across those focus areas for the startup portfolio. Because if you think about it, as you scale, you go to a million different, advisors, consultants, freelancers, agencies, analyst firms. You're buying different tech tools. If we can help streamline even just a couple of those into one partnership and align our incentives appropriately, it'll be really great. So that's the way we're building that operating model. And that operating model is now over 65 employees. We have bootstrapped and self-funded that business. And inside that business is also our investments team that's managing and deploying about 20 million of capital per year in early stage B2B software. So it really is I guess we have a huge vision, but we're on the nice path to what we said we'd do in 2019. And I think it's becoming more clear to the outside world. You can come to York IE into the front door. You can follow along with our content, our own thought leadership, our curriculum, our education, and you can engage with us in a myriad of ways, from signing up for our newsletter to listening to this podcast, right? All the way through to we're your lead investor in your seed round, and we're, on your board doing governance work, right? And everything in between. And that's been the model of how we can engage the startup landscape and shake it up a bit.
Well, fantastic. And I imagine, given your network, you have tons of activity here in the Northeast, but throughout the U.S. and abroad. Give us some stories, maybe, of who you're.
Yeah, I mean, it's funny. When we first launched, it was September of 19. So we pulled the ripcord out of Oracle late summer of 19 after 3 years post-acquisition from Dime, which was a great run. I think a lot of people were surprised. At least I stuck it out that long. And originally, pre-COVID, we thought it would be a lot more concentrated in New England and the Northeast, given our networks, but also just given a very hands-on model we assumed would be very face-to-face, right? And then pretty quickly, I think about 60% probably of our engagements are probably New York up, East Coast, kind of down to maybe the Research Triangle. But then everything else is all over the place. We still do have a concentration in California. But we, last investments, one was in France, two were in Canada. One was a follow-on investment. Founder lives in Dubai. Company's headquartered in London. So I think we found that the world's a lot smaller, and a lot of interfacing and support can be done very remotely. We still run our company predominantly in New Hampshire, and Manchester, New Hampshire is our headquarters. But we were engaging globally. And there's just so many amazing companies. We're working with, a good example of a great one early on. We did Metadata.io, which is a demand gen automation platform.
Sure,
our early investments have been taking off and they're kind of automating a lot of the MarTech space. CyberHaven's a cybersecurity IP protection company that's done incredibly well, growing incredibly fast. But we also work with the likes of Link Squares and Stavvy and Network to Code, which are way more scaled out companies that wanted advisory support from York IE, but we're beyond our investment stage, right? So just goes to show there's just so many connection points in our model where, again, a lot of the VCs that have services only work with their investment portfolio. We want to work with as many startups as possible in a low touch to high touch way.
Fantastic. Well, it's all about the ecosystem, and you built an incredible one. Congrats on all your success. Hey, we're all getting out into the world. I'm traveling to Vegas next week and then New York City. And what's on your agenda, your radar for the rest of the year?
Yeah, I've got a couple board meetings coming up. I haven't actually traveled crazy amount. I almost have come to the terms that I used to travel, as just more than anybody.
Every week. Yeah.
Yeah, I started my career in as a sales guy, and I was on the road nonstop through Dine. I remember when I took the job at Dine, the founder said, "Oh, you won't need to travel at all. We do everything over the web and on the phone." And the first day I was there, I was like, "You want to know why your sales aren't going anywhere? You're not getting in front of any clients. You're not getting in any trade shows. You're not speaking at any conferences." So I think I'm a firm believer in FaceTime. I've got a trip to New York, New Jersey coming up. I've got a great lunch coming up in Boston next week. So starting to get out there a lot more. Nothing extravagant. A couple of our team members, though, our CTO and our CMO, two of my co-founders, are off to Gujarat, India, where our development headquarters are. So if anyone's listening and needs any full stack development help, one of our service modules puts U.S. product managers in front of our Indian dev team that's growing incredibly, and our team's going out there to interface with that growing team. We started with 4 engineers, 35. So
that's amazing. Well, thanks for the update. Good to chat with you again. That was my main goal for this call. And onwards and upwards. Your success is fabulous. Look forward to seeing more news and announcements and partners and investors.
Thank you so much. I appreciate you having me.
All right. Thanks so much, Kyle. Take care.
Take care.